Oil prices are down into the 60s after for a long period of time, hanging in the $70 to $80 range. And, this is going to have a large impact on markets. Now, oil did bounce back today, but Brent crude fell below $70 a barrel for the first time since late 2021. And there are major banks that are saying we could head into around $60 per barrel sometime next year. You're talking about Citigroup, JP Morgan, and some of the world's largest commodity traders. And there's two ways to look at this. Obviously, from an industry perspective, that means lower profits. So exposure there, and you see that with the relative strength of a lot of those ETFs. I could easily argue that this is actually where you want to buy the energy space, because you have the strategic oil reserve where they're going to refill at these levels, and you also have the frackers and E&P companies that just are not really incentivized to grow production at these prices. They say the cure for higher prices are higher prices, and vice versa. The cure for lower prices are lower prices, because economics went out. And now from an economic perspective, this will certainly actually help the economy. Why? Because the Fed is going to see, this is going to feed into inflation data, and it's going to allow the Fed to ease more than they would have otherwise. In fact, the ECB, they're set to deliver their second rate reduction today, and they pretty much did that. The Fed is obviously expected to cut rates next week, but what about going forward? To the fact that inflation, will be pushed down because of this, will allow them to promise even more rate cuts going forward. Now, what is driving this? Well, first is the demand side. You have a debt deflationary bust that's happening in China. So that is a big adjustment to overall demand. And our economy here domestically continues to slow, although, not as crazy as it once was. Now, adjusted for inflation, oil is now at levels not seen in over 2 decades, nearly 2 decades. And so that's the demand side. Global oil production is up 1.5 million barrels a day this year and next. And so that's surpassing world demand growth by about 50%. So that's also pushing those prices down. Now, once again, if we get a weaker dollar, though, because the Fed can cut rates, that will also buoy oil prices. So I actually think we're getting to a level where oil is becoming more attractive. Oil-related names are becoming fairly attractive.